Record. So thank you so much, everyone, for joining this webinar all about financial planning and wealth building. It is designed to be educational, but also to give you the tools that you can really start to use to plan your finances. So for those of you that don't know me, I'm Rukayat Kolawole. I'm a chartered financial analyst, proud mother, and founder of PaceUP Invest, which is the platform that I'm going to show you very shortly. Essentially, we say we are a behavioral wealth operating system for you because we want you to be able to build wealth on your own terms via a holistic financial planning. And we combine both behavioral science, human expertise, and also AI. So I have over 18 years of experience in investment banking, investment management, capital markets, and I've managed billions of assets and delivered strong investment outcomes for both individuals and corporations. And aside being founder of PaceUp Invest. I'm also an executive board member of European Women in Payments Network because I very much believe in financial inclusion and also when it comes to diversity. And I'm also a co-founder of Black Professionals Europe. And why am I talking and why do I find this topic very passionate? Aside having worked for nearly 2 decades in the industry of wealth building and investment banking, when people talk about financial inclusion, sometimes they feel it's for those that perhaps don't have access to bank accounts, but it couldn't be further than away from the truth. So, a personal story of mine, I mean, despite my extensive career in high finance, I almost found myself excluded from the world of wealth building, right? And it's a proof that systemic barriers are still there. So what happened? The financial advisor rejected my mortgage application due to my gender and race, calling me risky. And this was really a wake-up call for me, right? And I moved my money to another bank where I was approved. And this really shows the power of taking control of your finances and really having a plan in place. And this experience really ignited my mission to empower many people through financial literacy and wealth building because I believe that wealth isn't just a tool, it's really a foundation for resilience. And really, when we look at across the global markets, millions of investors like yourself are entering the financial market, but really lack structured financial planning. And most people rely on fragmented financial advice, social media influencers, and trial and error investing. This isn't the way to build wealth. And why is wealth building more important than ever? Number one, for financial security, because building wealth provides a buffer against economic uncertainties like inflation and market fluctuations, and really ensuring financial stability. Long-term goals, it helps to achieve long-term goals such as retirement, education for children, and personal milestones. So you don't really have to rely solely on income, living paycheck to paycheck. And lastly, generational impact. So wealth building allows for intergenerational wealth transfer, really creating opportunities and stability for the next generation. So what will I be covering today? I will be covering the factors that are influencing investment planning, keeping cool when markets do not, very important because markets are always going crazy, behavioral biases that we may have. And I would then demo the platform to show you how you can plan your finances on a holistic basis. So to learn, to plan, and also to invest. So, what is the factor? The first one to really go into, so it's not going to be a long conversation around this. It's really the age. So, this really impacts and influences financial and investment planning. So, for example, when we're young, we can afford to take more risk with our investment planning because we have more time on our side, right? But then as we are older, we should invest in a safer investments, even if they give lower returns. Because when we're younger, we usually have a high human capital, and this means the net present value of your future expected labor income. So the more time you have to work, then the more time you can accumulate, save, work, and then convert that human capital into financial capital, meaning tangible and also intangible assets that you own, either individual or in your own household. The next one is the income. So the larger the income, the more risk bearing you become, right? And it also depends as well. And this is because there's a greater ability to recover from investment that may not perform as we originally expected. But then as your income increases, so does your tax rate. So the tax rate is really important to consider when you're planning your finances and also your investing. And we also have to consider if we want to spend or reinvest the income on our investments or not. But we also need to have this self-control when it comes to spending our income. Next one is really liability. So this is what we owe, right? And they're usually in sum of money. So this can be credit card balances, student loan, car loans, mortgage, and it can be really, really difficult to estimate future financial needs. And part of what I'm going to show you on the platform is how it will help you to do that. But also you can use financial advisors to really help you shape your expectation. Next is the assets. So this is what we own, meaning having economic value that is available to meet your debt and commitment. So this includes like cash, your deposits, your retirement account, if you have one, your brokerage account, your life insurance, real property, but also personal assets like art, jewelry, and ownership in private businesses, and also entrepreneurship, right? So the larger the asset base, the more risk bearing you tend to be. And this is because there's a greater ability to recover from investment that may not perform as we originally expected. So on the other hand, you might feel more comfortable taking a conservative approach as well. I'm going to show you all this as well in order to help you have a more comfort in your risk-taking ability. Family size and situation. Well, having a large family size, it really impacts our financial planning, but we still need to plan. It's really important to take into consideration the number of people that are earning income in the family. The less the number, the less the risk we can take. And when we think of family situation like marital status, the number of children, the ages of family members, that's also very, very important when it comes to our financial and investment planning. So the next one is really the risk tolerance. I'll show you how you can do that as well. While some are naturally more comfortable taking more risk than others, but then if we feel like we're risk averse, meaning we do not like to take risk, even when our financial plan requires it, then we need to avoid taking too much investment in risky products because we have to think about your willingness to take the risk as well. So there's a difference between willingness to take risk, but also the ability to take risk, right? So willingness is more of the psychological aspect of it, and the ability is really what your assets and what you are capable of investing into. And lastly, goals. Very important. We need to identify and create a financial goals, right? So some of us have specific goals while others do not. But it's really important to have goals and really plan towards it. So I'm going to show you this as well and on how to really stay focused on your goals. And examples of goals may be financial security during retirement, wealth building, ability to provide support to family members, or even fund higher education expenses for children. And goals often compete with one another. So, and they may change over time. So your goal this year might be different from your goal next year. And it's best to keep an eye on goals and really work with someone that can help you to do this. But our platform also helps you to stay focused on what your goals are and if you are going away from your goals. So by show of hands, before I start, how many of you are already investing or you're just thinking about starting? It would be interesting to kind of know if you can just like, maybe you don't have to show because everybody is kind of, I can't see, but if you can do the thumbs up from the Zoom, if you're currently investing, great. I see one, two, super. Okay. So many people, or three, amazing. Four, oh, one, two, three, four. Okay. Quite a few already investing. This is good. A few not yet. But it doesn't matter. Wherever you are on this journey, this session is really for you. So because whether you have invested for years or you're still sitting on the sidelines, I think the biggest challenge isn't knowing what to invest in. It's also knowing how to stay calm when markets don't, like we were currently saying. So I'm trying to make this relatable to what is happening as well. And in today, I will give you simple ways to do that exactly. So the first one is really when it comes to volatility. So volatility is normal. So for those of you that are already investing, this will feel familiar. But for those of you that are not, this might be exactly what's holding you back. So the thing is, markets will always go up and down. That's normal. But here's where people get stuck. They think volatility means risk or danger. In reality, it is the price of building wealth. So if you're waiting for the perfect moment to start investing after doing your financial planning, I'll be honest with you, that moment does not exist. And I'm sure like some of my clients are on here and I keep like telling them this as well. The goal is not to avoid the ups and downs in the market, is to understand and really accept them. Next one is you need to stop checking constantly. So if you already invest, you might recognize this. Markets drop, you check your app, you feel stressed, you check again. And for those not investing, this is often what you fear will happen, right? And you're not wrong if you don't manage it. Because the more you check all the time, the more emotional it becomes, the more short term it feels, the harder it is to stay rational. So the simple rule is please do not treat investing like social media. You don't need to check it every day. In fact, checking less often leads to a better decision and outcome. Tune out the voice. Now, let's talk about what stops many people from even starting. This is what I hear all the time when I'm talking and when I'm out there giving speeches as well. It's really the news. Market is crashing, recession fears, uncertainty everywhere. And for new investors, that those of you that are not investing, it creates fear, right? And for existing investors, it's more like, okay, doubt, like, why is this happening all the time? But here's the truth. Headlines are designed to grab attention. Most of us know this. It's not to build wealth. So whether you've started or not, do not let media dictate your decisions. Don't confuse noise. There's always noise with strategy. Once you have a great start strategy in place, which I'm going to show you, then all the other things will just be noise. Because reacting to headlines is how people stay stuck or even make mistakes. Next is you really have to focus on your goals. So I've mentioned goals earlier. This is where both groups come together. So if you've started investing and if you haven't started investing, because whether you've started or not, the real question is, why does this matter to you? So it always has to be about you, not someone else. Is it financial security? Is it independence? Is it freedom of choice? Because markets going up and down this week does not really change your life goals, right? So instead of asking, is now a good time to invest? Ask, what happens if I don't start at all? And this shift is really, really powerful, especially when it comes to our mindset. Next is think long term. And this is the mindset shift that changes everything, right? Long term is important. Just think about it like when you're at work as well. You always think long term. What is your 5 years projection? What do you want to be? Where do you see yourself in 5 years' time or whatever it is? Put investing as this as well. So for new investors, you don't need perfect timing. You just need time. And for experienced investors, you already know that short-term moves can be really misleading, like when there's a lot of movement in the market. So when you zoom out into like the future, into the long term, you realize that crashes look smaller, recoveries become clearer, and growth becomes visible. Because at the end of the day, once you've done your planning properly and on the plan on the road to wealth building, it isn't built in days of month or months. It's built over years gradually, and this is where the compounding effect comes in. And really, the earlier you start, the easier that journey becomes. And lastly, avoid emotional decision. And this is where most people go wrong, especially when markets are moving crazily. And I will show you on our platform how we really help people when it comes to that. So for investors that are currently investing, selling when markets drop locks in losses. So you lose money. And for non-investor, waiting for certainties often means missing opportunities. And really, both are driven by the same thing, the emotions, right? And fear keeps people out of the market. Panic pushes people out of the market. And neither of these build wealth. So if you have a great plan in place and a great strategy in place, all this should be taken out as well. So really, the goal is not to eliminate emotion, it's to not let it control your decision. So at the end of the day, there will always be emotion in investing. In as much as people want to tell you that there isn't, there will always be. But it's for you not to let it control your decisions. And I will show you how this helps later. So really quickly, before I go into how to really help you with this, I want to show you like different behavioral biases that can creep up either for both investors and non-investors. So to really understand it as well. So the first one is what we call loss aversion. So I've made it very easy. So it's meaning you're losing 50 euros hurts way more than you winning 50 euros, basically, right? So you might see your account drop by 5% and you feel an urge to get out immediately to stop the pain because you feel the pain of losing it. But in reality, markets always move up and down, and reacting to that short term is often what prevents long-term gains. Next one is what we call anchoring. So I'm going to answer questions afterwards. This is really when you anchor something, think of it as a ship anchor. It's been anchored, like the price tag of something as well. So you're getting stuck on the first price that you saw. So let's say you see an investment, is that stock, bond, or real estate, or whatever it is. It was, let's make it simple, $100 last month, and now it's $70. You think, oh, it's a bargain simply because of the old price that you've anchored it back. But when you think about price and value, they're totally different things. So don't let past numbers really dictate your future choices. Now, let's talk about confirmation bias. It means you're only looking for people who agree with you. You're confirming what is already in your head, right? You're seeking the high five, like, I need this high five, basically. And let's say you buy a specific fund, right? You will likely search for YouTube videos saying why this will 10x, why this will 20x. Like I mentioned earlier, social media influencers, you have to be really careful. And you will ignore the saying that why might this fail? So always try to find a counter argument before you invest in something if you're investing by yourself. So the next one is what we call the availability bias. So it's so scary, like it's recency. It's something that is common just because it's in the news. So for example, if the news, like I mentioned earlier about the news cycle and all the time, if the news is shouting about a market crash, you might think your money is in immediate danger, right? And you tend to overreact to whatever happened most recently rather than looking at decades of market history. So for example, if you look at S&P 500 over the past 70 years and whatnot, all the time it's there has been crashes in between, but then when you keep investing and also keep contributing to it on the long run, it's actually done amazingly well. So you have to look at it in a way that not to always react immediately to what is in the news, but look at how it has performed. Even though past performance doesn't indicate future performance, you need to look at how the crashes have actually performed in the past and what has happened to the stock going forward. Next is the overconfidence, meaning beginner's luck. Thinking you're a pro after you've won something. So let's say your first investment goes up like, oh, 20%. You think, oh my God, it's easy, I'm natural. And this leads you to taking huge risk with the money you can't afford to lose. Just remember that sometimes the market is just having a good day. So don't be too overconfident in your ability when it comes to when you start investing. And lastly, the regrets aversion. So meaning you don't want to do anything in order to avoid feeling stupid later. So you might want to wait for the perfect time even to start investing or doing anything because you're terrified of buying today and seeing it drop tomorrow. And this fear of regret keeps many people from ever starting. And this is the biggest risk of all because you miss out on time and growth. Time, very, very important because the more time you invest, the compounding effect on that is amazing. And then the growth trajectory is just great. So please, all these behavioral biases, think about it and see where you fit in and how you can try to avoid these behavioral biases that might creep in or might prevent you from planning and also from investing. So now let's go into the short demo as well. So essentially, like I mentioned earlier, what we are is it's behaviorally intelligent financial planning that really personalizes your wealth journey. So instead of separating education, planning, and execution across different apps, we bring everything under one intelligent link. So we combine behavioral automation with AI so that you get personalized, guided financial decision. And this means confidence and also better outcomes for you. So we've talked about theory so far. It's simple, but in reality, is the action. This is where people struggle. They think, where do I start? What do I do with my money? Or how do I know I'm making the right decision if you've started already? So instead of just talking about it, let me show you what this looks like in practice. Okay, so this is just to kind of show you in practice what over 25,000 of our users are using to really, really build their wealth and plan their finances.
Mhm.
So before I go into the demo, let me just quickly look at the questions, if there's any questions. The slide has not moved. Can you see my slide? Yeah, you can see my slide, right? Okay, super. So someone did not see the slide moving, but can you all see my slides? Yeah? Great, super. Okay, now let me go into the platform to show you. I need to stop sharing here and then share the right thing. Okay, so this is the platform. You might see individual, company, and advisor. So I'll be showing the individual because I'm looking at you're an individual as a person, wanted to understand this. When it comes to the company, we also provide the solution to employers to provide it to their employees, basically for their financial well-being. So the employers pay on behalf of the employees for them to be able to plan their finances. And when it comes to advisor, is a totally different thing as well. So if you're a financial advisor, you can use the platform. So it's totally different view as well. You can use a platform to engage your clients and help them on their wealth building journey. So let's go in here to show you exactly what it looks like. So I'm going to use my login details. So when you log in a snapshot, so this is what the dashboard looks like. So it all has 000. Some of it doesn't, but it's really just to let you see what it looks like currently. So it's all in here, what you can do is basically you can take a tour, right? So it really helps you understand exactly what part of it is. So your personal finance, your learning, your investment aspect of it, your notification, also on here, your billing, your agents, and also your media to learn. Okay, and also view your goal progress. And your asset allocation, it shows that as well, your recommendation and next step, so you're done. Okay. So essentially, this is what it is. So I've mentioned it's both behaviorally intelligent, we use AI, but also human interaction. But the most important thing is you have to personalize your journey because we look at you as the individual, as a person, not as a group of people. So what you can do is you personalize your journey. Let me just go back because I've done this already. So what you do is once you start, it tells you, ask you where are you in your life stage right now. You choose wherever you are. How stable is your monthly income? You put whatever it is. How do you usually make money decisions? You put whatever it is. So what outcomes most matters mostly the next 12 to 20, 24 months. So it's really your short-term aspect. And then what currently causes the most money stress? You put that in there. How do you currently save money? What is your investment comfort level? Which learning format helps you most? And then once you're ready, you launch it. So what happens here is the platform understands you as your individual with everything that you've put in there, right? And you can see the personalization that I've just done here. It connects to the AI suite, your personal finance, your learning management system, and your risk assessment, right? So this is not complex, it's very easy. You might think, oh my God, this looks complex. No, it's really easy, and it's also to help you to ease your planning as well. So once you come in, and you start putting your personal finance together, right? So this is where your planning comes in. This is where you put in your short-term goals, medium-term goals, long-term goals, right? You can see the remaining balance, months to targets, required monthly savings. So it also helps you to understand exactly what it is, your income, your saving, your fixed expense, your expense tracker. So all this goes in here. And then in the stats, you can see the stats basically. So it's all zero now because I'm still doing some things on the back end. But then it shows you your stats. For example, if there's an allowance available, it takes you in there to let you know this is the amount you need to allocate. And then it gives you an insight, right? So currently your savings rate is zero, below the recommended 20%. Review discretionary expenses. So it's getting this 20% from another aspect of it, which I'm going to show you now. It's also telling your expense tracker needs attention. You need to import before month end. So it's really, really engaging, and you can compare year to year, year to date, and also week and on a monthly basis. But you can also come in here and really start to use the AI agent to really pull out specific information that you need. But before I go into the AI agent, I want to show you the investment suitability and risk assessment, right? Because this is very important. This is where the behavioral aspect comes in. You know, I mentioned earlier when it comes to the behavioral and also the behavioral biases and how the platform can really help you. So after completing the journey over here, right, you have to complete the journey, very personalized to you. It's not the box standard questions that the banks and all this other platform give you. No, this is super personalized. Once you've completed it, then you really understand your personal behavioral insights. For example, over here, there is the composure, confidence, and impulsivity. Let's say you come across as someone that is impulsive. So over here, okay, I have medium impulsivity, meaning I tend to be deliberate when I consider financial decision, but I can occasionally leap before I look, basically, meaning I'm quite impulsive. This is very important during, remember I mentioned the market volatility. So if you score high on impulsivity, what this does is it triggers uh, a message to you during market volatility and explains to you not to go in and sell any of your investments, basically. You know, I mentioned earlier, that was why I took my time to go through what happens when the market is going crazy. So this is really, really important. And if you are connected to a financial advisor as well, it triggers an approach to your financial advisor to contact you and explain to you why the market is like this so you don't go in and sell out of your investment. So this is really, really important and very cool. And also when it comes to composure as well. So again, it tells you in a nutshell. So meaning, okay, high composure. So that means I don't need to pay attention or don't take time to ensure that the overall wealth is properly organized or invested. So it's very, very important to look at this. And when it comes to the risk as well, you can break it down. So it also tells you what it is when it comes to your risk level and regarding excessive losses in your capital and you're prepared to see. So it really helps you understand it. You can then break down and see the different aspects of it. But for those that are really interested in sustainable and impact investing, right? Let's say you have a need for evidence. So currently this is low, but if I have a high need for evidence, I can then put the document in the fin chart, which I'm going to show later, and pull out the information to let me know I'm actually investing properly. And once I've done all this, I download my report, and based on my report, this is where I see my asset allocation broken down, right, into stocks, bonds, real estate, commodities, digital assets, or whatever it is, based on all my journey that I've filled in here. So it's super, super hyper personalized in that sense, right? The next thing I want to show is really when it comes to um, the AI simulation, because a lot of people are scared of just going out there to invest. So one of the biggest thing is, what if I make the wrong decision? So instead of guessing, you can actually simulate different investment outcomes before committing. So using the AI, you will see how your money will grow over time, understand best and worst case scenario, and really try to adjust your strategy before putting real money in it. And this is where you have the playground, basically. So this is the playground whereby you put in your quick investors attributes. So what I showed you earlier, that is more of your personalized portfolio. So it includes every other asset classes. Here, it's really just the stocks, indices, and ETFs for you to be like, okay, I want to invest now in the market, right? And so that I know what I need to choose. So you put in here, you put in your currency, your age, your income, your education, married or single, kids, one, and then it automatically calculates your risk. And then if your initial investment amount is 100, and then you've chosen like different ETFs and stocks across multiple markets, so you can choose different regions, and then you can choose the available markets in there. And then it shows you how you need to allocate your 100,000 if that is what you have. So this is just an example. I don't want to be going in and out so that we don't waste too much time. And then it also shows you the portfolio value. And you can download this and really look at it and then compare it to what you're seeing out there in the markets as well, basically. But then you can also come in here to really simulate what it will look like. So let's say your risk profile is growth at the moment and you have initial investments of 25,000, you want the contribution of 750, investment for 9, 10 years. Let's put investment of 6. So you can see it gives you like defensive to make sure your portfolio is really defensive at 3.5, best case, which is 6, and an upside of 8.5. And what you can do is you can validate the assumptions in the fin chart, which I'm going to show you. You can then refine the allocation in the playground where I showed you earlier so that you can see how you can invest before actually investing in the real world. And then you can still continue to review the defensive case, the base case, and the upside. So this is super, super powerful in really helping you to kind of understand before you go out there to invest. So this is the fin chart whereby you can validate some of the assumptions. I'm not going to walk through that, but it's really, really powerful. And we have it in different languages. So we've trained it in all these languages. Okay. I'm Nigerian, so we've put the Nigerian languages there, but we also have Portuguese, Spanish, German, French, and English. And what is really cool about this is it's encrypted end to end, so nobody sees your data. We at PaceUp, we don't even see your data as well because it's GDPR compliant. We're a German company first, so everything, whatever you upload up to 10,000 pages, it's it's for your own, it's anonymized and encrypted, and you can pull out the information however you want to pull it out, basically in whatever format, and you can interact with as many documents as possible. And then we have the AI agents, right? So this is what we call the agent to agent interaction. So I've shown you the personal finance, I've shown you the risk assessment, I've shown you the portfolio, and also this is the learning. They all interact with one another, providing you with insights, with recommendation, with if anything changes within everything that you've put in there, it provides that to you. So this is autonomous, but you also have the control over it because sometimes people are still really scared when it comes to agents and when it comes to AI. So you still have an overall assessment over it. But what it does is really simplifies and brings out the information that you need. It gives the recommendation and also when it comes to just nudging you on the next step to take. Last but not the least, very important when we talk about retirement planning, right? A lot of people leave retirement planning to when they are 40 or 40 plus. No, as soon as you start working, please start putting something aside. So this retirement calculator really, really helps a lot of our users. So for example, let's say the current age is 30, the retirement age is 65, for example, in Germany. It means 35 years to save, right? And then maybe you're starting out with 20,000, you have 6,000 euros contribution every year, and then conservative 7% before retirement, and then after retirement 4%, because obviously you have to think about reducing the risk that you take during retirement. And then maybe you're planning 40,000 every year as a retirement income. So it gives you a nice projection to let you know that when you get to that age of 65, this is how much you would have saved, and it's going to last you another 30 years, right? So some people, they might not have enough longevity. So now it's time to think about what part of it can I reduce. Let's say you're going to outlive your asset, then you have to think about, oh, perhaps I need to reduce my retirement yearly income, or I have to increase my contribution, or I have to increase my starting amount. So this is why it's really, really important to start planning as early as we can. And last but not the least, this is the investment calculator that also helps you to really understand your investments and also helps you to think about interest, compounding interest. Why it's very important.
This is something.
Always. Sorry, can you go on mute, please? This is very important because it helps you to think about compounding and continuous investing. Okay, so all in all, this has kind of given you a plan and it gives you clarity, and I hope it helps you to act without actually second guessing yourself. And really, a key part of it is to recognize the fear of starting. The platform helps you to kind of provide the nice holistic view for you and also kind of recognize waiting for the perfect moment. There's never a perfect moment. And also when it comes to panic during downturns, when it comes to the behavioral aspect I showed you, it engages and lets you know not to panic, right? And these are all normal, but when you see your long-term plan clearly, it really becomes much easier to stay consistent, to ignore the noise, and really avoid emotional decisions. And this is how you stay calm, whether you're really afraid of investing, or even once you've started investing and perhaps you're more prone to be more impulsive in this instance. And once again, once you have a plan, right? A lot of things start to look very different. You stay committed to the plan, right? And things don't become scary anymore, especially those of us that we haven't started. They become opportunities that you've prepared for because you already know what you're doing, right? Why you are doing it with your goals and how it plays out on the long term regarding all the different aspects I showed you when it comes to the planning. So, in order to bring all this together, right? Whether you've started investing or you're still on the sidelines, right? The difference isn't access to information, right? Everybody, like information is out there, right? You just have to find the right information. It's really having a clear plan, which I'll show you how to have a clear plan, the confidence to really act, and the discipline to really stay consistent. Because in the end, it is not about reacting to the market. It is not about, okay, what someone else is telling you to do. It's really about you being actually prepared for the journey. And just to close out, just to mention the team behind this, so it's not just only me blah blaring away. So we do have over 80 years of expertise in this journey in wealth management, behavioral management, and also AI and fintech. And yeah, I really, really hope, and my encouragement to you is to do not wait for perfect conditions. Please do not rely on guesswork. Start with a plan, test your strategy, understand your behavior, and then please take that first step if you haven't already. Because the sooner you start, the more time really works in your favor. And that is the end of the session today. And I'll open the floor for questions. We have about 14 minutes, so please feel free to ask me anything. This is an area that I'm really, really passionate about, and I really want a lot of people to build wealth on their own terms, have a proper plan in place. Because if you don't have a plan, everything just become haphazardly. We get emotional, or we just take on opinions of people that it's not really our own goal, that what we are trying to achieve. So yeah, if you have any questions, please feel free to just unmute and just let me know your thoughts. If you have anything that can be that you're thinking about, then please let me know. Don't be shy. Okay, so I'll go through what's in there.
In the chat, I think you have a few questions in the chat.
In the chat. Yeah, let me
Yeah.
have a look. Okay. Since 5% growth in 2 years, stunning and hard to believe. Yes, it is. It's across all asset classes, like I mentioned. So when you have a proper strategy in place, right, and you are looking at it on the long term, but also contributing as well, you can achieve that. So this is what we've done. We do not promise, we do not say this is what you're going to have. If anybody promises you a certain amount, please run away. Please run away. So when it comes to strategy, when it comes to different asset classes, when it comes to different geographies, this is what we help our clients with. And I'm sure some of our clients are on here. They haven't reached that 75, but they can tell you they have like 50% or more on their portfolio. But it's up to them to reveal themselves. I won't say anything. Can investment be done directly on the platform? No, not at the moment, because we have clients globally. So what we do is you can create your strategy, and then we advise you on the best places to invest, basically. So we are very much independent in this sense, because we provide the platform globally, so we don't have the execution on the platform yet. But by the end of this year, we're going to have the execution on the platform directly. But at the moment, what we do is we link you to the right places to have your investment. So we are independent in the sense that it's really based on your own suitability and risk assessment, that part that I showed you. And then once it creates your breakdown, then we let you know the best places to go to, not a place where they will just sell you products and then it doesn't work for you. Any more questions? Just feel free to unmute and ask, please.
Uh, Rogayad, I don't have a question, but I just have a comment, that earlier that you made when you knocked at the door of a bank to get a mortgage
Yeah.
and had the biases. So I had exactly the same. So when you are a woman, you know, no matter what, even if you have good salary, a good job, they prefer to have like two incomes and took me six banks actually. I knocked at the doors of six banks until I could get a mortgage that was less than 80,000 euros.